What's going on, everybody? It's Jay Peasy, and today I'm going to be talking about the three most important rules to incorporate in your trading for 2021, or any year for that matter. These rules will apply to all types of trading, whether it's stocks, options, forex, crypto, any type of trading, these rules will apply. Okay? Now, for the first and most important rule, rule number one is develop a risk management plan. Understanding risk management is so crucial for any success in trading. Okay? What defines a solid risk management plan? Well, we need a meaningful stop loss, okay? We have to use a meaningful stop loss, right? And how do we know if a stop loss is meaningful? Well, it depends on the style of trading. If you're taking day trades and quick in and out trades, right, maybe the low of the previous 5-minute candle is your stop loss, okay? Or the last hourly candle, whatever type of chart setup you use, a near term low should be your stop loss. If you're swing trading, okay, and holding positions for longer periods, maybe the bottom of yesterday's candle or the weekly candle is your stop loss, okay? You just have to know your exit and, align that with your style of trading. Next, understanding risk to reward and recognizing trades that have a high risk to reward profile, okay? Um, Super important. I'm going to make a video that goes more in depth to risk to reward, but essentially you want to find trades that have minimal risk with a high reward, okay? A good benchmark is you want to try and find trades where your reward is at least 3 times your maximum risk. It's not easy to do this at first, but the more you learn about it and the more you practice identifying these types of setups in the market, you'll be able to do it, and it'll really have a positive effect on your P&L. Um, Next up is trading within your means. All right, so this is so important as well too, because not everybody has the account size to trade Amazon and Tesla options and all these expensive stocks, right? But you don't have to trade these stocks to get big returns. There's plenty of smaller cap names or just stocks with cheaper shares and cheaper option chains that you can pull just as good of trades on, right? So you got to remember, just trade within your means. Don't try and blow your account trading something that's too expensive. All right. Rule number two, avoid overtrading. Okay. What defines overtrading? Well, we start with account size, right? If you're trading a small account, you have to maximize quality over quantity, right? If you're trading a small account, you can't afford to take a bunch of poor trades, right? It's going to bring your equity down too much. It'll probably blow your account. So if you're on a small account, right, you have to use that risk reward metric and find trades that offer, high reward for minimal risk. If you're trading a $25,000 margin account and you have unlimited day trades and your cash, settles right away. So, overtrading is not as big of a deal because you have wiggle room to lose some money. Plus, you have unlimited day trades on your 25K account. So, this is something that definitely affects small accounts more. Not to say that big accounts should just, take 1,000 trades a week and then overtrading won't hurt you. Overtrading will still hurt you, but it's much more crucial for a small account to be, conscious of how many trades they're taking, right? I'll probably make another video explaining margin versus cash accounts for those who don't really understand. I know a lot of you probably do, but I know there's people out there that still don't understand what a cash account is and probably have only had experience with a margin account through Robinhood or whatever it may be. So, third is risk reward again, right? As I talked about, you have to find trades that offer a high reward for minimal risk. Overtrading comes from taking too many trades that aren't high risk to reward. They're trades where you might as your reward might be the same as your risk. So these are the trades you want to avoid, right? That's avoiding those trades is how you avoid overtrading. Okay. So lastly, for rule number three, find a trading strategy that you are comfortable with and that works best for your lifestyle and personality. Okay. How do you decide what strategy works best for you? Well, first off, you need to experiment, okay? And you can do this via paper trading. TD Ameritrade and Webull have great platforms where you can paper trade and figure out what strategy works best for you and what type of trading you're most successful in, okay? It also comes down to your lifestyle, right? Do you work a 9 to 5 job? Are you a full-time student? Are your days free? Do you work at night? So these are the type of things you got to ask yourself, you know, maybe if you have your days free, you can, day trading and intraday trading will work best for you. If you're someone who's a full-time student or working 9 to 5, maybe swing trading is the right option. Okay. Also, you got to weigh your personality traits, your strengths and weaknesses. Okay. Are you a conservative person? Are you a risk taker? These are all things you have to weigh and consider when deciding how you're going to trade and how you're going to go about, approaching the market, right? For somebody who's conservative and not as big of a risk taker, and somebody who's patient, right? Maybe swing trading is the best way to go. But like I said, it all comes down to experimenting and finding out what works best for you. That's why paper trading is such a beautiful thing, because you aren't risking real money, but you can go and do the trial and error and see what works for yourself. So I highly recommend paper trading, even if it's just a practice. Even if you're an experienced trader, paper trading won't hurt you, right? It's just going to make you better. So I really think that's a huge thing. Um, but that's the third rule. So on to the recap, right? The recap, we got it. For number one, develop a risk management plan. Okay, it's so important to control your account and your losses, right? Same with over trading, right? We can't be taking subpar, non-quality trades. You want to stress quality over quantity. Okay. And third, find your trading strategy that fits you. Okay, this takes time and experience and experimentation to figure out, but with time, and with knowing yourself, you will find the trading strategy that works best for yourself and allows you to become successful in the market. So that about wraps it up. I hope you guys enjoyed this video and found some value from these tips. These are things that can be applied to any kind of trading, like I said. So I hope you guys are able to implement these and find some value from it. But other than that, that's all I got. Thanks for watching. I'll be back soon, posting more content. Please subscribe, like the video. I'm out. Appreciate it.